Hey, let's say you just got pre-approved and you're out shopping for houses. Let's talk about the things you can't do that could potentially delay your ability to purchase a home or deny you of the ability to purchase a home. And if you just don't do these things, you should be in good shape, assuming your lender did a nice job on your pre-approval. They reviewed your documents, that you didn't tell them things that, or didn't hide things from them, those kind of things. Let's go through the things you cannot do once you're pre-approved, because again, they can either delay your ability to buy a home or deny you of the ability completely. First of all, when the loan officer looks at your income and calculates that, that's the income they're using for your pre-approval for your loan. Any changes to that income could either change the amount or anything like that. So any job changes could either delay or deny your ability to purchase a home. If you, let's say you're a W-2 or a salary employee and you go to full commission, you're probably going to get denied because that income may not be used, may be able to be used. If you open your own business and that's what you're going to do right after you're a W-2 employee, you may be in trouble. So if any kind of job changes will affect your ability to qualify. Now, if you get a raise at your job, that may help you, but it may also, again, it may delay your ability to purchase a home. If you go from W-2 to commission, or you go from W-2 salary, hourly, those kind of things to self-employed, that income's not going to be able to be used for 2 years. And so if you're trying to close a loan in 30 days or you're trying to buy a home in the next 2 months, you're out in terms of those kind of things. So if this is it, if you don't just wake up one day and decide you're going to be self-employed and open your own business, if this is something that you're going through in your mind, speak with your lender before you get pre-approved and see if this is something that's going to affect your loan. Money. So basically what I'm talking about here is your bank accounts. The lender has to source every large deposit that goes into your account. So if you throw a bunch of money into your bank account and it can't be sourced, meaning it's cash or it doesn't come from a thing that you can show us where it came from, we may not be able to use that money. And if all of that money is for your down payment or your closing costs, if that's the only money you have, you may be in trouble. You may have to wait a couple months until we can source that kind of money. Again, if you close a bank account and don't have access to that and we're not able to source a large deposit because it came from that account, we may be in trouble there too. And then the other thing is if you have, when your lender says, hey, your closing costs are whatever they are, $20,000, and you have $20,001 in your account and you spend it down to $10,000, if you spend too much money and don't have money for the closing costs, that's going to delay your ability to purchase a home or even deny your ability to purchase a home. Credit. If you apply for a bunch of credit cards and those kind of things, we're going to have to re-pull credit at the end of the process because we do one final check just to make sure there's no new debts added. And if there's inquiries on your credit report, we have to go back and pull a full credit report. And if your score is lower because of that, if those kind of things, it could either change your rate, it could change your ability to qualify, all those kind of things. So don't go applying for a bunch of credit after you apply for a loan. Here's one exception. When you apply for a mortgage, if you go and shop within 20 to 30 days of applying for the first mortgage, all of those inquiries are okay. The challenge is if you apply for a mortgage and then go buy a car or go apply for car loans, then we're in trouble there. So all the inquiries have to be within the mortgage industry to avoid that, having to pull that full credit report at the end. If you run your credit cards up, that may affect your credit. And if there's an inquiry, then we have to pull a new credit report. That could affect your debt to income ratio. If you close accounts, sometimes if those are the accounts that are keeping your score up because you have a long history with those accounts, if you close them, again, if we have to do that final pull at the end, you're in trouble. And what I'm saying is we're trying to mitigate the amount of risk in your home loan process. So don't run up your credit cards. Don't do those kind of things. And then don't co-sign on any loans, because if you co-sign on a loan, we have to add that to your debt to income ratio. And what I'm seeing right now is a lot of people are shopping at the top of their debt to income ratio because homes are a little bit overpriced. And so that could create some issues. What you should do is continue to live your life. Like if you go out to eat on a Friday night, or whatever, go on a date, and you're going to buy dinner, what I'm not saying is don't go on and live your life. What I am saying is don't go buy a new car, don't go buy the furniture for the house, because if you buy the furniture for the house before you live in it, you may have to sleep on the couch you just bought in a van down by the river. Okay? So again, continue to live your life. If any of these things are coming up for you, let's say you have a job change, just communicate with your loan officer ahead of time, because these things don't just pop up, and don't surprise your loan officer. For the most part, we can solve problems, and if we can't, we'll help you come up with a solution that may work or help you out. Communicate with your loan officer, avoid job changes, avoid large deposits, don't apply for a bunch of credit, don't run up your credit cards. Have a great day. If I can help you with your loan, I'm Tony Byrne from Heritage Home Loans. I'd love to do so.